And here we go. Getting ready to go tra-la-la. Sam, Bruce, Crypto Police. I gotta figure out what does that mean, Crypto Police. It'd be kind of fun to have a chat with you. Paul, what's happening, Paul? Hope all's good. John, how are you doing tonight? Wonderful, wonderful. Vando, Robert, Tech to Net. Tech to Net, interesting name. Brian James, what's happening? Texas Brown Eyed Girl, what's happening? Judy Richardson, what's going on? Nate, Jim Bibby, how are you doing? How's the weather up there, dude? Vando, it's like Vando Calrissian. Okay. Pete the Girl, interesting. Hi, Miss Brown Eyed Girl, how are you today? Del Fritas, ¿qué pasa, amigo? ¿Cómo está? You can do four. Okay, cool beans. Let's all do this. Yay! Cold down here. Double shirt, right? Yep, double shirt night. A couple days ago it was a triple shirt night. Like, ooh, that's crazy. All right. It is, let's get ready to roll. My name is James. Let's get it started. Here we go. My name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow for a safe, predictable, consistent 1% per week. That's my main goal. My main goal at being 60 years old, currently retired, take all my little bit of money and put it into a trading strategy where I get 1% every single week. Now, 1% per week, hey, long ends. Long ends? Is that right? Lorne 3 ends. Okay, where would you put 100,000 long today? Okay, dude, I don't do anything long term. Everybody always asks me, long term. I'm 60 years old. There is no guarantee I'm going to wake up tomorrow. None whatsoever. Now, 20s, 30s, 40s, yeah, different story. 60s, 70s, and 80s, totally different story. When you reach a certain age, you have a different outlook in life. Now, for those of you that are younger, that are still working, your outlook on life is from the perspective of an employee and where you are going at your age. Okay, once you get to the retired life, everything changes. Okay, can we talk about AGNC? Vando, let's do this. Somebody asked me about AGNC last night. Didn't get around to it because we ran out of time. I'm only here until 11:15, somewhere in that area. So let's take a look at AGNC. Why not? AGNC, and here we go. Here's AGNC right here. Now, always, I'd like to take a look at the 1 year chart first, because the 1 year chart gives me an idea of, am I moving on forward, or is this going to be a quick 1, 2, 3? No, thank you. Let's look at the next one. So, anytime I look at a stock, I'm looking for 5 things: the high, the low, where was it, where is it, and where is it going? Okay? Not that difficult to see. This is pretty simple. Look, down, up, down. Pretty simple, right? So after that, I then want to take a look at the numbers. What do I mean by the numbers? Well, what am I buying it for? Okay, well, currently the price right here, the bid, the ask, $9.30. Well, that's the current price for AGNC. Okay, it is what it is. So if I buy it at $9.30, which one do I want to sell? Well, I want to sell the one that's closest. Okay, the one that is closest is either going to be the 9 or the 9.50. Well, the 9 is going for 28 this week, not really this week. Let's look at next week because there's only 2 days left. There's actually no trading tomorrow. So let's take a look at what we're going to do on Friday. So this one's not have much value to it, so we're not even going to do this week. We're going to look at next week. But here's the thing: look at next week. Next week, the 9 is going for 9.32. So 32 cents. I'm losing 30 cents. The numbers just don't work for AGNC. Terribly sorry, John, my man. Have you covered Pepsi recently? Just bought Feb in the money calls today. Well, John, let's take a look at it. Hold that thought for 1 second. 1 second there, John. Peter Griffin. I'm 23, 35,000 in the bank. I don't want to clock in all my life. I'm very good at saving money. I'm going to assume that's at saving money. Please, any advice? Okay, Peter, here's my advice. Number 1, education. That's going to be the big one. Oh, I got a couple of questions here. Are you billed by science guy? Yeah, no, 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 no. All right, so my advice is one, education. Hi, Professor, good evening. Yeah, good evening to you too. Education. Decide what it is you want out of life. Now, $35,000, that's a nice amount of money, especially at your age. Okay? What do you plan on doing with it? Now, I can't tell you what to do, but here's the thought. Okay? Now, I'm 60, this is what I would do. Now, 35,000, 1% per week is $350 a week. 350. Now, you could hypothetically take that money, just drop it in, leave it in, and keep compounding it over and over and over and over again. Because at 1% a week compounds at 72% per year, which means you can double your money every 14 months. And at your current age, well, you got to figure out what do you need to live comfortably. So if you need, let's say, $4,000 a week, well, $4,000 a week, sorry, $4,000 a month. $4,000 a month is $1,000 a week. Well, what do you need in order to generate $1,000 a week? Well, at 1%, that's 100,000. Well, you got 35. Okay, you're more than 1/3 of the way there, but here's the thing. Okay, compounded 1% every single week, you can double your money every 16 months. That's a year and a half. So hypothetically speaking, within 2 to 3 years, and that's not adding anything. So if you're at 35,000 and you add something every second, awesome idea. Let's do this. Let's do this right now. Okay, hold on one second. We are going to go to. I created a compound interest calculator. So just for the fun of it, let's see and check out some numbers. Okay, Peter, give me a rough idea. Rough idea. What can you throw in besides the 35,000? What can you throw in every single week consistently? Jonathan, what was that? Joshua, I honestly think the market is due for a big correction. I would buy puts on housing REITs. Okay, thank you, Jonathan. I appreciate that. However, Jonathan, here's my thought. My thought. Okay, Caleb, WCA, we'll write that one down. WCA, we'll look at that in a little bit. But anyway, I'm chatting with you. 35,000 starting out with. What can you comfortably put in every single week? Now, for that, I live very cheaply. Every single week, I would say 250 a week. Freaking awesome. Great. Watch this. Watch this. You're going to love this. All right. We're going to go to what I call a weekly compound interest calculator. Okay. Now, I created this years ago because it didn't exist. It's the only compound interest calculator that I know of that allows you to either add on a consistent basis and compounds on a weekly or a monthly basis. Now, considering I concentrate mainly on weekly compound interest, all right, so let's do the numbers there. All right, so very first at the top, it's on my website, the10minutetrade.com. You press on the hamburger, that's that thing over here in the top corner, see it? Okay, you just click on that and then go to the weekly compound interest calculator. So let's throw some numbers in there just for the fun of it. Okay, so you got 35,000, and you said you can throw in 250 a week. This is gonna be freaking awesome. I think you'd be able to do this in like 3-5 years. Hold on, 250 every week. Okay, there you go. See, 250 every week, and then we're gonna compound it at 1% because that's what that's where I chatter about. 1% a week, cool. So a week. All right, here we go. 35,000, that's what you said you want to start with. 250 every single week. Okay, we're looking at 1%. Now, let's take a look at 5 years. So let's say hypothetically your goal is $4,000 a month. $4,000 a month, you need at least 100,000. Okay, so how long starting out with 35,000? Adding 250 a week, how long is it going to take you to get to 100,000? Well, let's figure it out. I'm saying 5 years. Okay, 5. Hold on. So let's put it in right here. 5 years. Okay, let's get rid of that and put in 5. So what we're going to do now is we're going to calculate by adding 250 every single week along with the 35. Can you get to 100,000 within 5 years? Sorry, at 700,000. All right. So your contribution over a 5-year period is 100,000. But look what your account would run up to, 700,000 within 5 years. Okay, so let's go back. Let's look at 3 years. 3 years. That's still plenty. It's 700,000 is a lot. That's $7,000 a week. Okay, $7,000 a week. That's $28,000 a month. I think you could be able to. Okay, let's see if you can hit 100,000 in 3 years. Starting out with 35, adding 250 a week. So at 3 years, 258,000. Damn it! I thought I was going to be right. Can't see the information populates. Yeah, I get that because this is, what do you call it? I don't know how to do the night vision for this. Let's see, can I do it? Extension, split, print screen, split screen, screenshot, find more settings. Appearance, color, dark. See, it's already set for dark. Okay, so I don't know how to reset it. No worries, the information is valuable. So the thing is, let's get out of there. All right, I don't need that. Let's get back to where we were. So the thing is consistency. Now, what I do here is, if you take a look at all my trades, where is it? Okay, I have to actually get to the page. Hold on, I'm getting to the page. All right, so I want to show you all the trades that I do all year long. So here's all the trades that I've done so far last year. This is all 2024, all here. Each one of these is 1 week. I share 3 accounts, see? Account 1, account 2, account 3. You just click on any one of these. It opens up and tells you everything I bought for that week, bought or sold. All right, so that being said, and no, the red is not losses, okay? The green is buying, the red is selling. So anything in red means I sold something. Anything in green means I bought something, okay? So they're all here, every single trade I made this week. And if you go through them, you will notice a pattern. I only do companies that you probably heard of. So let's look at a few, okay? Kohl's, you probably heard of Kohl's. Albemarle, that's one I'm not 100% sure if everybody knows who Albemarle is. Wynn, like Wynn Resorts, they're like a resort. Ford, Riot, Nordstrom's, Walgreens. Okay, that's basically, you probably heard of every one of those companies. That's all I do. And if I'm looking at 1% every single week, in your situation, you could probably hit 100,000 in maybe 2 years, maybe. Okay, but that 100,000 would give you $1,000 every single week. That's $4,000 a month. So your challenge that you have now, one is, can you do it? Can you decide to do it, and can you stick to it? Can you do that $250 every single week and try to reach that goal? Because once you reach that goal, once you have enough money coming in on a weekly or monthly basis, it's not going to change your life. You're not going to become a new, better person all of a sudden. You're only going to have one less thing to worry about. But here's the thing, that one less thing to worry about, it's a huge one. We're the only species on the planet that's got to pay to live here. So if you can get money out of the way, 5 or 10 minutes every day, that's why I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. That means 10 minutes. It shouldn't take you more than 10 minutes to balance out your account. It's nothing more than getting up in the morning, 10 minutes earlier, doing your morning ritual, and sitting in front of your computer for 10 minutes. Where is my positions? What do I have available? What should I do? Paul, I am done with this. You're saying some things that I don't understand exactly. Uh-oh. But I subbed exactly. Okay, open my eyes. Okay, so here's the thing. I don't want to intimidate you because yes, it can be complicated because you're entering into something that's new. Okay, so what do you know about investing in the stock market? Probably not a lot for some people. But here's one thing you do know. And don't kid yourself that you don't. You jump in your car, you drive down the road. You look to the left, you look to the right. Home Depot, Lowe's, Walmart, Johnson & Johnson. Wait a minute, Johnson & Johnson. Well, Johnson & Johnson maybe. Colgate Palmolive, Ford, General Motors, General Electric. Some of these companies, you probably said, yeah, I've heard of them. Well, these are the only companies that I invest in. Companies that are household names. That makes sense to me. See, I have 5 rules. Wait a minute, let me back up for a second. Okay. I invest in dividend stocks, specifically those companies that have consistently proven themselves. Well, what do I mean by that? Well, Ford is 100 years old. General Motors, 100 years old. Harley Davidson, 100 years old. Procter and Gamble, Lowe's, did I say Home Depot already? MasterCard, Visa, Bank of America, Wells Fargo. A lot of these companies that I invest in are over 100 years old. You've probably seen them. You probably know who they are. Nabisco, Kellogg's, General Mills. Okay, these are the companies that have consistently ran the U.S. economy for generations. So great, you buy these, you get a nice 1% every single week, and then your account grows to whatever it is. Now, I understand you don't know very much about investing, but you do know, well, if I buy something for $1 and I sell it for $2, well, I just made a profit. Well, this is almost the same, but a little bit different. So here, you're going to buy something for $1, you're going to sell it for $1, and you're going to get what is called the premium, which is, hey, I'm buying this for $1. Great, I'm going to sell it to you for $1. So you give me X amount, and I will hold this for you for 1 week. At the end of the week, you buy it from me for $1, and you get your 1%. I know 1% doesn't sound like a lot on a weekly basis, but here's the thing. 1% every single week is over 50% per year. And if you consistently invest, 10 minutes a day, 1% a week, you can double your money in 16 months because compounded, okay? It takes 16 months to double your money, okay? If you consistently get 1% every week. Now, if you want to, you're new here, fine, dandy. You can go to my channel. You're on YouTube at the moment. You can actually go into my YouTube channel and check out all the live shows that I have done, all the videos I've done. And you'll see they all sound the exact same because it is the exact same. The stocks that I'm looking at now, January 2025, are basically the same exact stocks I looked at. Oh, matter of fact, here we go. It's right here, right now. So let's go all the way back because we're in week 2 of the first quarter of 2025. Week number 2. All right, so all the way back here. See, what were we looking at week number 1 for last year? So last year, week 1 in January, I was looking at CVS, Ford, General Motors, and Macy's. Well, let's open up one of these accounts. And no, not there. Uh-oh. I want to do this, and then I want to do this. Nothing there. I wanted to compare, this year to last year, but apparently I don't have any of those. But I do have Harley Davidson, Intel, Kohl's, and all that kind of nice, neat, fun stuff. But what I was trying to point out is, if you take a look at what I was looking at last year, I'm looking at the same things. Okay, CVS, Ford, General Motors, Macy's. Whoops. CVS, General Motors, Southwest Airlines, Comcast, and Ford. Okay, we're currently in week 2. Week 2, here we go. Week 2 last year. Lowe's, Comcast, Ford, General Motors. Macy's, Ford, General Motors, Clorox, Lowe's, Ford. And then week 3 would be next week. And now this is week 3 for 2024, okay? So we have General Motors, Comcast, Wells Fargo, Morgan Stanley, Ford, so on and so forth. James, I got to go now. You convinced me to start education myself, blah, 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 blah. Cool beans. Well, Peter, hopefully I helped you out. Have a good day. We'll see you the next time you want to jump in. But stick to the simple stuff. Do not get complicated. Do not jump in over your head. And definitely do not use real money until you are good at the practice money. That's why we play Monopoly before we go out and buy some real estate. We want to know how the process works. John, how are you doing today? No, we have not looked at Pepsi yet. So, Noted on those last points. Thank you, sir. All righty. Okay, let's get out of here. Let's get out of there. Let's get to here. And let's go over to here. And over to here. And here we go. Okay, so John, you want to take a look at Pepsi? Well, let's take a look. Now, John, why you bought options on Pepsi is beyond me. Now, I don't ever tell people what they should do. But here's the interesting thing. Okay? 80%. You ready? 80% of all options expire worthless. So you bought options. So you are now in the 20% group. Now I'm a option seller because I want to be in the 80% group. Because say I want the odds and probabilities in my favor. So 80% of all options expire worthless. I do not want to be a buyer. I want to be a seller. This way, I know that, my odds of being right, 8 to 1, okay? Sorry, 80% chance that I am right. All right, let's keep on keeping on. All right, so let's take a look at Pepsi. Okay, now, personally, John, I would not have jumped into Pepsi this week. Hold on, let me explain why, all right? First thing I always want to see every time I look at any chart is 5 things. 5. Number 1, the high. Number 2, the low. Number 3, where was it? Number 4, hold on. See ya. Selena, hold on, I'm going to get to that question. Where was it? Number 4, where is it? And number 5, just take your little finger like so. Up, down, up, down, up, down. Find out which way it's going. Okay, simple, up, down, all right? Now, the reason why I wouldn't jump into this now is because look at where it is, okay? We have a downtrend at this moment. Look, here's your high right here, back in September. And it's done nothing but down, up, and down, and we have a new 30-day bottom or a new bottom of the year today. So today is the bottom of the year, look. Okay? I don't like jumping in unless I know it is the bottom. Okay, Selena Anderson, recommendations for someone to get started with 1,000. Okay, Selena, my number one suggestion is always practice. Practice and education. Now, $1,000 is nice to get started with and just continuously work at it. What do I mean? Well, I do investing for weekly cash flow. It's a total different way of thinking because most people, as we were taught and born and raised, it's like, oh, wait, what is our annual percentage? So I put it here in the end of the year, you'll get this. Yeah, sorry, that didn't work for me. Okay, so if I do this on Monday, what am I going to have on Friday? Great. Now let's take this and do it next Monday. What am I going to have on next Friday? So I'm looking 1% every single week. So $1,000. Granted, it's not a lot to start out with, and you're probably only going to make what, $5 or $10 a week. But here's the thing: $5 or $10 a week every single week. If you can make 1% every single week, that $1,000 will turn into $1,500 by the end of the year. Now, if you add to it every week, so you start out with 1,000, you throw in $5 a week, $10 a week, $20 a week, and consistently, systematically, predictably, and what's that other word? What's another word? Diligently. Ooh, that's a good one. Consistently do it. 1% every week. Whatever you add to it, eventually it's going to compound and grow faster and faster and faster. So number 1, education. Okay? Educate yourself. Get to know the language. Get to know the terminology. Okay? Read books. Reading books are free. Watch videos on YouTube. What is a covered call? What is this strategy? What is that strategy? Who is the market maker? What's the difference between the bid and the ask? All it is a different conversation. Okay? Now, before you drove the own cars, before you actually got your driver's license, you were basically just a passenger. Hey, Mom, can you take me to the store? Yep. Jump in. Now that you're a driver, it's a whole different world. Okay? You got the gas. You got the brake. If it's a stick, well, you have the clutch. Gas, brake, clutch, it's shifter, all that kind of nice, neat stuff. Then you have the what do you call it? The tachometer, the speedometer, the brake, the emergence brake, the directionals, right mirror, left mirror, rear view mirror, okay? All that stuff. It's a huge, it's the same thing. You're going from being a passenger in the car, you know, hey mom, give me a ride. Fine. Now you're a driver. So not only do you have to pay attention to everything that's going on in your little world here inside the car, well, you have to concentrate on what's in front of you, what's beside you, and what's behind you. So investing in the stock market is basically the exact same thing. Where are you? Well, you're here. You have $1,000. Great. This is what I want. Now, what do I have here? What do I have here? Where am I going? And where was I when I started? Same thing, just a whole bunch of different language, a whole bunch of different terminology. Buy something you understand, something you believe in, something you can trust. Okay, I love Coca-Cola. They've been around for 140 years. General Motors, over 100 years. Harley-Davidson, over 100 years. Companies that have consistently seen a lot of crap. Now, companies that have been around for 100 years, they've seen World War I, World War II, Korea, Vietnam, the Great Depression, the stock market crash. Well, stock market crashes, because you had the crash in 29. You had the crash in 87, you had the crash in 2000, you had the crash in 2008, you had the crash in 2021. Is there another one coming? Well, of course there's another one coming. There's one every 10 years. Okay? Don't kid yourself. Don't come in here all blinded and saying everything's going to be peachy. Just be ready to weather the storm. It's going to go up, it's going to go down. That's what it does. If you take a look at the stock market in a whole for the last 100 years, you will see every 10 years or every decade there is a crash, there is a pullback, there is a recession, there is a correction, whatever you want to call it. But overall, over the last 100 years, the stock market has consistently increased between 9 and 10% every single year, even considering the crashes, the pullbacks, all that kind of nice, neat, fun stuff. So if you're going to get into this game, it's a nice, easy game. There's no employees. You don't have to pay overhead. Well, you do. You have to pay for your, what do you call it? Your electricity, because you do have to be able to access your account. But think about it. No inventory, no employees, no boss. You can do it from anywhere you want. There was a few more that really, really interesting. Okay? And there's no cap on what you can make. Okay? So it's great in that aspect, but you do have to learn a whole new set of language. Okay? Because who's the market maker? What is his role? What do you mean by the open, the close, the high, the low, the bid, the ask? What does all that mean? Well, each thing has its own place. Okay? That's like anything in life. That's like even your clothing. Okay? Top drawer, you know, your underwear drawer, your socks, your you know, that kind of stuff. You know, second drawer, you have your t-shirts. Third drawer, you have your long sleeve shirts. Bottom drawer, you have your pants and your jacket. Whatever, however you want to do it, everything is systematically. Same thing in the stock market. Cynthia, thank you for your feedback. I must have missed that part where you explain the strategy, covered calls. I plan on doing this eventually. Okay, now Selena, I get that. That's what you plan on doing eventually. The very first thing you should do is education. Now, the reason I say covered calls is because the trading strategy I'm about to show you here was created for my 9-year-old daughter. So it had to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. Thanks, Jim. Woohoo! Thank you. So it was created for a 9-year-old. When I say simple, well, the easiest trading strategy there is just to buy the stock. That's the easiest. But it's not predictable and it's not consistently profitable. So that didn't work. So I need to come up with a strategy that was simple, safe, consistent, and profitable. So that is the covered call. It's the simplest and safest strategy. So you're going to buy a stock at a certain price, you sell it to someone else for the same price you just paid for it, and then you collect 1% per week. Now, after you learn this one simple strategy, then you move on to other things. Because if 50% per year isn't enough for you, then you're definitely wasting your time here. Okay? So this here is for cash flow, not capital appreciation. Then there is a difference. Capital appreciation are for those people who want to buy a stock for $1 and in 10 days have it going up to $5 or $10. Yeah, that's not what this is. Okay, here is cash flow. Okay, I honestly don't care if the stock goes up. I really don't. I want consistent profitability. I want safety and I want predictability. When you retire, that's what they say when on the news you hear them say, well, people on a fixed income. I am on a fixed income. I make 1% of whatever my little portfolio is. So hypothetically, if I have $100,000 in my account, 1% every week is $1,000 a week. That's $4,000 a month. That's $52,000 a year. That's if I had 100,000. If it was 50,000, it would be $500 a week, $2,000 a month, $12,000 a year. Okay, 1% is 1%. That's my goal. Now, I do have a bunch of different trading strategies that I do, but I only give away for free just the one here. It's the simplest, it's the safest, it is the easiest, and it does make at least 50% per year if you do it right. Okay, so we're going to actually do a couple examples as the night progresses. It's 9:30. I'm going to be here until 11 because after 11 I take about an hour break and then I do another show at midnight for the people on the West Coast. So I'm having this little contest here, okay, unbeknownst to the both of you. Okay, so here right now, 9 o'clock Eastern Standard Time on the East Coast, we are looking for the audience here on the East Coast. Well, how many people can we get? What's the audience? What's the interaction? All that kind of nice, neat, fun stuff. And then at midnight, well, at midnight here on the East Coast, it is 9 p.m. on the West Coast. So I do another show exactly like this for another 2 hours for the West Coast people. So I'm kind of curious, which one has the better one? Ludwin, East and Central is best. Well, so far, because I looked in the numbers, I'm strictly a numbers guy. Okay, how many people show up? How many people stay? How many people ask questions? Ludwin, you're welcome. Okay, let's move on. All right, so John, Pepsi. Don't get me wrong, I love Pepsi. They are a very good company. They have 50 years of increased dividends. But for me personally, I don't tell people what to do. I would have waited a little bit longer because this is not really an up day. Because this is a new 30-day bottom or a new bottom for the year. Okay, so how do you know it's the bottom? How do you know it's not going to go down tomorrow? I like 2 days to the upside. Let me see if I can find an example for you. Right here, here you go. A high, she drops right here. Here's the bottom. Okay, 1 day the upside, 2 days the upside. Here's most likely where I would jump in. Because you can't call this a bottom. Hold on, let me slide it over. Just move it down over. Okay. See, you don't know if this is the bottom because you don't know what's coming next. Okay? So the very next day could be lower. So let's take a look. Let's move it over 1 day. Okay, now, this is 1 day to the upside. Is that guaranteed that this is the bottom? No, it does not. I would love to see this strategy, and thanks for this. Okay, Selena, just hang out. I'm actually going to do some trades and some examples. Okay, so I'm here for 2 hours, so let me show you some examples. Just sit tight, get some questions ready if you have questions, and ask them when you have a chance. Okay, so as I was saying, it looks like it's the bottom, but how do you know? How do you decide? What has to happen for you to decide, yeah, this is the bottom, this is the good time to jump in? Well, for me, I want 2 days to the upside. Well, here, there's only one. Okay, so let's go to the next day. Well, see, there's my confirmation. This is my confirmation. You guys got to figure out what's right for you. Some of you don't mind buying at the bottom and guessing. Okay, because basically that's all it is. It's just guessing. Okay, so you see right here? How do you know that's the bottom? You don't. You need something to compare it to. Well, I compare it to 2 days to the upside. Here, is it the bottom, 158? Don't know. So move a day forward. Oh, look at that. It wasn't. It went down again. And it went down again. See, I don't call a bottom until I have 2 days going in the opposite direction. There's one, there's two, there's where I want to jump in. And now, for me, yeah, that's the new bottom. Okay? Bottom, 2 days to the upside, third day, that's where I'm jumping in. But that's me. So yeah, I would not have jumped into Pepsi yet because today is the new bottom. So which means tomorrow it could go lower. And after that, it could go lower. You just don't know. That's why I like 2 days the upside. So John, I honestly don't know what to tell you, but I hope it works out for you. I do. I don't buy options because here's the thing with an option. The 145.5. All right. So I don't know which one you sold. All right, hold on. Let's get rid of that. Okay. Now, when you buy an option, it's at 146. Okay, so when you buy an option, okay, the 146, you buy it for $1.24. Well, your break even in this instance, all right? Your break even is 147.24. That's break even. So the stock has to go up a certain amount. So what did you buy? Okay. What was the strike price? And what is the expiration date? How much time are you giving this thing to move up? Well, move up from where? We don't even know where the bottom is yet. Okay? I don't buy options because 80% of them all expire worthless. But that's me. John, I hope it works out for you. So let's see what else we got here. What other questions? Now, wow, missed all these questions. I gotta go back to where we were. All right, right there. Okay, John, you're welcome. Oh, Brian wants to take a look at Whirlpool. Now, Mr. Fish, what happens if the stock is lower when the option expires? Well, if the option is if the stock is lower than the option you sold, well, you keep the stock, you keep the money, and then next week you get to do the exact same thing. So when I said I created this trading strategy for my 9-year-old daughter, let me briefly explain. A 9-year-old doesn't really know all the stuff you need to know to be a professional trader, but she knows the simplicities. Okay, what is the simplicities? Okay, this is a chart. Okay, here's the high, here's the low. This is where it was, this is where it is. Now when I want to buy, well, you buy with this number here, you sell with that number there. And as you take your cursor and you move your cursor around, well, the cursor will tell you what to do. Okay? Trade grid, buy, sell, all that kind of nice, neat, fun stuff. So for my daughter, it had to be simple. It had to be safe, predictable, consistent, and no way for her to lose. Okay? That's the 5 things. You're going to see a lot of 5s because it's, I'm trying to come up with a catchy phrase name, like 3x5 or 5x5, something like that, something interesting. So the 5 things I had to figure out. Simple, safe, predictable, all that kind of nice stuff. So I came up with 5 rules. Now these 5 rules are 5 rules. And they're the exact same now as they were 15 years ago when I first created the strategy. Rule number 1. Never buy something you don't understand. When I say you don't understand, you should, if I ask you a question, like if you like Pepsi, if I ask you a question, you should know the answer off the top of your head. Great. How consistently has Pepsi increased its dividends? Well, you should know it's more than 50 years, 5 decades. Okay? When was Pepsi established? How old of a company is it? You should know. If you're putting your money into a company, you should have a good idea about the basic information. Fish! What do you got there, Fish? But didn't you lose on the trade if the stock went down more than you sold the option for? Fish, no, you didn't. Okay? Hold on a second. All right. Fish, this is how options work. Let me explain it briefly, and we're going to use Pepsi as an example. All right? If I buy Pepsi tomorrow morning, $46.54, okay? That is my entry price. That price will never, ever, ever, ever change. 5 years from now, 10 years from now, 20 years from now, somebody will ask me, oh, you got Pepsi, what did you buy it for? Well, I bought it for $146.54. That number will never change unless you dollar cost average. Okay? It means if it drops down to 130, you buy some more, then you average the two together. Your entry price never changes. But what does change is the current price, and that's the chart. Okay? So, hypothetically speaking, if I buy at $146.54, I sell somebody the right to buy it from me for the closest amount to that. So 146.54, you have two numbers, 146 and 147. Which one's closer? Okay, look at both of them. Okay, and the 146 is a safer trade because it's already at 146. The 147 is going to be more profitable. So here's where you decide. Do I want profitability or do I want safety? Jade, how are you today? You want to invite, yeah, Jade, thank you for the request to co-host, but please send me a link. I will chat with you and we'll talk. If we have something in common, I'll invite you on. The 146 is going for 214. Well, you're definitely going to get your 1% out of that. The 147, well, it's going for 149. You're definitely going to get your 1% out of that one. But here's the thing. The 146 is a safer trade. The stock doesn't have to do anything. Okay, it's already over 146. Now the 147, yeah, you'll make a little bit more money percentage-wise, but the stock has to go up. So there's a lot of intricacies here. Simple, safe, predictable. So the safest would be the 146. Okay, so you buy it here, sell this one here, okay, and you collect this. That's more than 1%. Great. Now, let's say hypothetically on Friday, okay, because this option is going to expire on the 17th, which is next Friday. Okay, if the stock drops below 146, let's say it's 145.99, it's still below 146. Well, here's what happens. You keep this money. Okay, that money goes to you instantly. As soon as you sell the option, you get that money. You can do whatever you want with it. That's yours to keep. Now, if the stock ends up at 145.99, that option is going to expire worthless. 80% of all options expire worthless. But here's the thing. You keep the money and you keep the stock. And then guess what? You can sell somebody else the rights to buy it from you at 146 next Monday. Okay? And if by that Friday you don't hit your target, well, you can repeat it again. And then you can repeat it again. And you can keep repeating it until Friday afternoon at 3:59 p.m. the stock is above 146, which is the premium you sold. Now, if the stock goes down, great. You just lower your strike price, but not too close to where the action is, and not too far away where it's not profitable. Because most people invest in the stock market and they'll get one dividend every 90 days. Well, I'm here to show you why the hell do you want to do that? Why not get one premium every 7 days? As the stock goes down, when you lower your premium, okay? And when and only when the stock price is above the strike price, okay? Stock price, strike price. What I bought it for, what am I selling it for? Okay? Bought it for, selling for, premium I collect. Okay? So, that being said, as long as you never sell for less than what you paid for it, and you pick a good company. Now, Pepsi, I don't know about you guys, but I'm pretty confident when I say I think. I don't know 100% sure, because nobody can ever know 100% sure what's happening next week. I think Pepsi Cola is going to be making Pepsi Cola next week. As a matter of fact, I'm pretty confident when I say I think Pepsi Cola is going to be making Pepsi Cola next year. Okay, they've been doing it for 100 years. What do you think they're going to be doing the next 5, 10, 15, 20 years? They're going to be making Pepsi Cola. So rule number 1, always pick a good company. Never buy something you don't understand. That's rule number 1. Rule number 2, never sell at a loss. It defeats the purpose of the game, and it is a game. If you think it's not a game, then you shouldn't be playing, because it is. You buy, you sell. You buy, you sell. You make money, you lose money. You make money, you lose money. You buy, you sell. You buy, sell. That's what investing is. Okay? If you always buy a good company that you're willing to hold on to for the rest of your life, I have no problem whatsoever buying Pepsi and holding on to it for the rest of my life. But if it hits my target and I can make a profit, well, here's an interesting thing. It's not a profit until you take it. Okay? So if it goes up, I'm going to take the profit. A Pearson. Hello, sorry, I'm a bit hazy on how you set your sale price on the options if the stock goes down. Well, that's simple. Here, simple. All right, you ready? So now, as I said, this price never changes what you bought it for. So if I bought it for 146.54 and the stock drops down to 140, well, what's the closest strike price? The closest strike price at 140 is 140. But that means you're highly susceptible of being called away. So if it drops down to 140, and you bought it at 146, I wouldn't be selling the 140s where all the money is, okay? The money is at the money, where all the action is. I would be going somewhere in the middle, far enough away from where the action is, but close enough to still having some money coming in. Because like I said, most people just collect the dividend every 90 days. Well, here, I'm going to be showing you how I collect a premium every 7 days on the stocks that I choose. And the stocks that I choose, more than likely, you probably heard of the names. Yes, Whirlpool is one of them. Pepsi is another. Coca-Cola is another. Ford, General Motors, yep, those are on that list also. So, hopefully that helped out. Brian wants to take a look at Whirlpool, WHR. Well, it would be helpful if I was here, WHR. Okay, so Whirlpool, same thing as Pepsi, and it didn't take me long to figure it out. See how long it takes you to figure it out. You ready? A person, hold on a second. Hold on a second, A person, I'm going to answer that question. So, Brian, Whirlpool, you ready? First 5 things I want to see. High, low, was, is, direction. Simple, right? Down, up, down. Well, it's currently in a downtrend right now. Let's zoom in a little bit closer right here. See? Here's your high here. It's coming down. It is bottom fishing. What does that mean? It's looking for a new bottom. Okay? I don't ever find something where it's going down. Now, don't get me wrong. I love when it's going down. Why? Why do I like it when it's going down? Well, number one, it's a good company. I know who Whirlpool is. Okay? I'm here to make money. Okay? I'm not here to satisfy anybody's desire. So you have your 30-day high here. Your 30-day bottom is over here. Okay? Goes up. There's going to be profit taken. This is going to keep going down until it stops. When it stops, it turns around and goes back up. That's where I want to jump in. Now, I'm on my computer every single day. When I say the 10-minute trade, well, I do 10 minutes a day. Okay? If all my money's invested, all I do is I watch my positions. When I have money available, which is usually every Monday, I take a look at opportunities like this. Well, it's Whirlpool. I know who they are. Okay? I know how consistently profitable they are. I need a fan on. It's a little warm in here. Okay, so a person. That's a little better. There we go. Close. So there could be a case that the price can't hit the in the money price. Yeah, if you feel that could happen, go a little further up. Okay, so if you bought at 146, okay, if you're at 146 and the stock's currently at 140, and you think the 142 or the 143 is too close, well, fine, go for the 144 or the 145. As long as you have some money coming in. I'll give you my cow analogy, okay? My cow analogy. Here, I buy a cow. The cow gives me a gallon of milk every single week. Great, it works for me. But what happens if the cow gives me less than a gallon of milk? Do I get rid of it? No. I just say, oh, buddy, sorry about that. Let me get you some more. Hey, let me get you some more. Whatever, okay? But let's say she starts giving me a quart a week. Do I get rid of it? No. Okay, I bought it because I like it, because I want it. I buy Whirlpool because I like it, I want it, I want to get a premium every single week. Now, it may not be 1% every single week, but you'll find the longer you do this, there'll be companies where you get 2, 3, 4% a week, and you have companies that'll get you 0.5%. So if you get 5 or 6 positions, all right, this one's getting 2, this one's getting 3, this one's getting 0.5, this one's getting 1/4, this one's getting 1. Well, once you average them all out, it's 1% average for the week. Okay, it's an average. I average over 1% every week. Do I make 1% on every single trade? No. Okay? But some of them I'll make 2 or 3%. That's like Kohl's. Well, this week I made 2 or 3% on Kohl's. Okay, now I have Harley Davidson. I didn't make 1% on Harley Davidson this week. I made like a little over 0.5% on Harley Davidson, but I made 2% on Kohl's. So you bring the two together, I'm averaging 1.5% between the two. All right, hopefully that made sense. Okay, let's keep on going. Whirlpool, we just took a lower. Whirlpool, you can do 4. Thank you. You're welcome. Foot Locker. Now, I do have some Foot Locker. Okay. Now, first thing, always, 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 and it should take you 3 or 4 seconds. 3 or 4. Let's see how quick I can do it. Remember, I'm looking for 5 things. High, low, where was it? Where is it? Where is it going? Up, down, up, down. Okay? Again, same thing. This one is also in a downward trend. I own some of it, so yeah, I look at it twice a day, and it is going down. So how far is it going to go down until it stops and turns around? Don't know. You and I, we're the ones who decide. We sell and we keep selling until we find, like, holy shit, Foot Locker's at 20 bucks. I'm buying some. And when we get that oh shit scenario, we buy and then the stock goes up. Once it goes up a certain point, I jump out because I'm not looking to hold anything. I want to buy, I want to sell, I want to make 1% every week. That is my goal. All right. So Foot Locker again is the no because we're looking on a downward trend, looking for a new bottom. So I will continue looking at it every day. The reason being, I have Foot Locker in several different accounts. Okay, so I look at it twice a day. Once in the morning with my private morning trading group. A bunch of us get together, okay, and we trade in the morning. Now, at night, here with you good people, we look at the exact same thing. So yeah, I looked at Foot Locker this morning. Now I'm looking at it again. I have a good idea where it's going. All right. Fabulous Adam, how do I do this in a Caribbean country? More than likely, you're going to need what's called a VPN, Virtual Private Network, or somehow, there is a way. There's always a way. Taz, what's happening? Oh, and a good day to you too. Asim, hello there. Is US Steel at a good point to sell a covered call? Well, let's take a look at US Steel. I looked at it this morning because I do own some. What time does your morning group meet? Flock Queen, how are you? Honey, you were going to tell me how you made out on that trade last week, and you never told me. Amazon doesn't pay dividends. Right. But it is in Warren Buffett's portfolio. Is Amazon on your list or no? Would this strategy work? Well, yeah, it would, but I normally don't do Amazon, and no, I did not know he put it onto his list. All right. A person. Now, I try not to sell anything while I am on live, but if you want to join the morning trading group, just go to the website, the10minutetrader.com, the link should be in the bio. That will bring you to the Patreon where the Zoom meetings are. Okay, all the numbers are there. Like I say, I'm here to do this for free to give you guys people an idea. But I do have a morning trading group. And I got books. I got all that kind of weird shit to sell, but I'm not trying to sell anybody anything here. Okay? I do have it. If you want it, let me know. What hours? Here's the thing. I have no control over when the stock market opens. So, stock market opens at 9:30 a.m. Eastern Standard Time. So my morning live group starts at 9 a.m. Yusuf, how are you today? All right, so let's get back to where we were. U.S. Steel, Asim. Let's do U.S. Steel. I forgot what I was saying. Now, I do have U.S. Steel in several different accounts because the number was freaking awesome. A person, you're welcome. So, Jacob, I'm terribly sorry about the glare. If I knew how to change it to night vision, I would. See, some of my websites show up in night vision, where the writing is in white and the background is in black, but some of them just don't do that. And no, it's not a computer setting, because my computer setting is for nighttime. However, some websites, black lettering, white background, and it looks like a big glare. But here's the thing. This screen here is live on YouTube. So if you can't see it on your phone or your tablet, yeah, go into the other room, sit in front of the big screen TV, you'll be able to see the screen and these little tiny numbers. You can't see these numbers on a phone, okay? Okay, but you can see them on YouTube. All right, so we're looking at US Steel from Mr. Asim. 5 things I want to see, and it shouldn't take more than 3 seconds. High, low, is, direction. Simple. It gives me an idea of where it is. Now, I don't like buying at the bottom, and I don't like buying at the high. Right now, it's somewhere in between. Okay, great. At that, now I want to go and see what the numbers are. What am I buying it for? What can I sell it for? What am I bringing in? What's my profit going to be? I like U.S. Steel. Okay, it's on my list. It's over 100 years old. Started by Dale Carnegie in the 1800s, and it's still going to this day. $32.99 is the current price. So we're not going to look at this week's numbers. We're going to look at next week's numbers. Because this week there's only 1 day left, and you really can't get 1% for 1 day. You can sometimes, but very rarely. So we're going to look at buying and selling next week's option. So if it's at $32.99, the 33 for next week is going for 95 cents to 115. That is almost 3%. Do you have any idea how much 3% every single week comes to at the end of the year? Anyone? Anyone? Bueller? 3% a week is 150% per year. Okay, I don't get that. I don't get 3% every single week. But here, U.S. Steel, yeah, I can get 3% off of one position. Now, I might not get 3%. I might not even get 1% off to Harley Davidson because Harley Davidson is in a pullback mode at the moment. So I'm in a Harley Davidson at 41, and it's currently at 33. I'm not going to get my 1% out of Harley Davidson, but I'm going to get 3% out of U.S. Steel. So it evens out, that 1%. Okay, so Asim. High, low, all that kind of nice, neat stuff. Here's the current price. Here's the premium right there. So let's, now remember I said I was going to do an example. Let's do an example on U.S. Steel. Okay, first thing I want to do, a year ago was the high of the year. That's right around 49. From there, she drops, and here's the bottom. That is the beginning of September at $27. Take the last 30 days. You know what I forgot to do today? I forgot to watch an Elvis movie. It's Elvis's birthday, January 8th. And there's usually Elvis movies on today. Today I did a lot of nothing. I did. Okay, anyway, I made a bunch of phone calls, talked to a bunch of people, but I didn't actually watch any Elvis movies today, which is what I usually do on Elvis's birthday. Oh well, I have to watch one after this. All right, so here's the last 30 days. Here's the high, here's the low. Look, down, up, down, up. Well, today is a little bit of a hiccup. So ask yourself the question. Question number 1, does it make sense? Question number 2, do I like U.S. Steel? Question number 3, do I like U.S. Steel at this current price? Well, I like it at 33 bucks. If I buy it at 33 bucks, $32.99, sorry. And I sell somebody the rights to buy it from me for the exact same price I just paid for it. There's not a huge difference between $32.99 and 33. Okay, come on, let's not split hairs. Okay, 33, I'm picking up 95 cents. 95 cents is extremely close to 3% for 1 week. So here's what would happen. If I bought it tomorrow morning, I sold this, 33. If by next Friday, because the one I'm selling, okay, the 17th of January, that's next Friday. If it is above a 33 next Friday, well, I will get all my money back plus this premium, and I will make 3% for on U.S. Steel. Now, if it is below 33, let's say $32.99, I keep this money, and then next week I get to do it again. That's the beauty of the stock, because once you own stock, it's yours until you sell it. But an option, it is going to expire. No matter what happens, it is going to expire eventually. All right. So yeah, I like U.S. Steel. I have it. Ishmi Amor. Cool name. Pfizer, PFE. Interesting. Remember, it takes like 3 or 4 seconds. High, low is direction. Up, down, up. Well, cool. Let's take a close look because that looks good. What's this look like? 26.89. Well, the closest one is going to be the 27 or the 26.50. All right. Well, the 26.50 is going for 54. Well, that works. The 27 is going for 29. So you got to decide. Do I want the 26.50, which is a safer trade because the stock is already over 26.50, or do I want to do the 27? Now the 27 will give you a little bit more money, but the stock has to go up. Okay, but she's in an uptrend. Okay, so here's where you decide. I like to stack the odds and probabilities in my favor. Okay, but me personally, safety. Okay, I'm 60 years old. I have no desire to go back to work. None. Okay, I say it sounds funny. You know, I'm retired. I don't work for a paycheck anymore, but I am still working and I'm not getting paid. So when you retire, you get to change the focus. So my focus now is I go down to my mom's house and I help her in her yard, her garden, and I'm building her a she shed, so to speak. You know, all nice and fancy, because the hurricane that just went by a couple of months ago, yeah, tree fell on her shed. Now I got to rebuild the shed. Fine, we can update it. Okay? It's coming out really cool. Mom loves it. So I'm working, but I'm not getting paid. All right. That being said, Pfizer, high, low, all that kind of neat, fun stuff. Okay, the numbers are all working great. Let's take a close look at the chart, because this is the one-year chart. It gives me an overview for the year. It doesn't really tell me where is it going, because that's the important part. Okay, it's nice. This is where it's been. All right, yeah, I've been to Russia. I've been to the Bahamas. I've been to South America. I've been to Mexico. Great, I've been to Canada. Doesn't mean anything. Where am I going next? That's the important thing. If I'm going to attach my pony to this thing, I want to make sure it's going in the right direction. So let's take a look at the numbers. Okay? Last year, we were at 29. The high of the year was 31.49, and that was in the end of July. All right? So the low of the year, well, that's right here, the middle of November. And the low of the year is 24.48. So we know what the high is, we know what the low is, and here it is right here. Look at it. It's going up. You cannot argue if you want. Really, I'm not listening, because here's where it was 90 days ago. Here's the bottom. That's the top. There's the bottom. It is going up. Argue if you like, but it is going up. All right? So I want to take a look at the 30 days. Because the 30-day is the last 4 weeks. Now, if tomorrow should be a lot similar to what today was, which is similar to what the day before is, and then we look at the trend, what way is it going? Now, it's not that difficult. This is going down, and this is going up. It's actually that easy. All right, so last 30 days. Okay, here's the last 30 days, and this where it comes to a point where I say, no, not this week. And here's why. 30 days ago, we're at the 30-day bottom. We shoot up. Yesterday is the 30-day high. What does that mean? Well, usually 30-day high, it turns around, people start taking profits, and the stock comes down. Well, let's look at it a different way. Okay, the stock currently is at 26.89. But where was it 30 days ago? 30 days ago, we're at 25. So it's not a lot, but think about it this way. From 25, she goes up to 27.60. That's $2.50. Now, I know $2.50 doesn't sound like a lot to you, but on a $25 stock, $2.50 is 10%. When's the last time you got 10% for 30 days? So let me give you a little tidbit of a secret, which you probably already know, okay? If me personally, if I bought it at 25 and it's up 10%, you bet your ass I'm taking my profits, because it's not a profit until you take it. Also, nobody ever went broke taking profits. I'm gonna make a t-shirt. Nobody ever went broke taking profits, or it's not a profit until you take it. Okay, I might do both t-shirts, okay? Derek, started listening to your podcast. Thank you. Yeah, I'm having an issue with my podcast. Now, the reason I'm having an issue with my podcast is because my phone needs to be upgraded. Okay, I hate that shit. If it ain't broke, don't mess with it. It worked perfectly fine last year. This year they update everything, and now I can't use my phone anymore because they messed with it. Okay, I'm a Gen Xer. We basically say, if it is working, leave it alone. It was working fine until you messed with it. So now I have to buy a new phone. I don't want to because my phone works perfectly fine. I understand that same. But think about it. If it ain't broke, leave it alone. If it's working fine, leave it alone. So now I have to go out and buy a brand new freaking phone when the one I got used to work fine. All right, anyway, let's get back to where we were. So yeah, I like Pfizer, but unfortunately, bottom is here, the top is here. You cannot argue all you want. I don't want to hear it, but here's the bottom, here's the top. Okay, 25 to here is $2.50. It's not a lot of money, but it is a 10% increase. A 10% increase in 30 days. You'll be lying to yourself, and you'll be only fooling yourself if you think they're not going to take profits. Okay? You start taking profits, what happens? The stock drops. It gets down to a point, back down 25 maybe, and then people start saying, wait a second, Pfizer at 25? Hell yeah, I'm going to buy some. Because that's what we do. That's why we're here. We're here to take advantage of situations like this. When it's high, you take your profits. When it's low, that's when you buy. When have you ever heard, hey, Pfizer's at an all-time high. Let's buy some and wait for it to go higher. Yeah, no, it doesn't work that way. Did you see Pfizer? It dropped down to 25. Yeah, let's buy some. 25, it's up 10%. Yep, taking my profits, running to the next one. Now, we checked the other day. There are 9,813 different companies you can join any single day. That's a lot. Now, Pfizer does fit my profile, a company that's consistently profitable and has weekly options. It fits. However, it's in a motion, and it's at a position at this moment in time where people are going to start taking profits. It's going to come down. I don't want to jump into it until it finds the bottom. Shaggy, what's happening? All right, so I'm going to ignore the request for SCHD because when I say rule number one, never buy something you don't understand. So if you are buying SCHD, you apparently don't understand what it is you're buying. Okay? SCHD is not a no, it's a hell no. Do yourself a favor. Check the numbers. You should know exactly how consistent are they with their profitability. Are they profitable year after year after year after year? Okay? Is it going higher and higher and higher? Or are they doing 2 steps forward, 1 step back, 3 steps forward, 2 steps back? Yeah, SCHD, no thank you. IB Social, hey, good evening, sir. Check out T-Pet. Now, I can almost guarantee T-Pet's going to be a no. Never heard of it. And it is a no. Simple. No options, no thank you. No dividends, no thank you. No weeklies, no thank you. Sorry, IB Social. I have a specific rule, okay? Taz, 52 weeks, 12,000 a year, 200 a week. No, that's not right. Okay, hold on a second. Clear. 200 a week. Multiply 52 is only 10,400, Taz. Calculator. 10,400. Okay? 200 a week, 12,000. No, it's 10,400. Okay. Flash. So how do we get 1%? Oh no, we didn't do it. Let's go back. Which one did we look at that I liked? It wasn't Pfizer. It was the one before that. Shit. It was the one before that. I forgot. DVN. Let's check out DVN. Devon Energy. 35, 35, 35. Okay, great. We're going to use Devon Energy. DVN. Also on my list. Very first thing I want to see is the 1-year chart. High, low, was, is. What's the direction? Up, down, up. Well, that looks freaking perfect. Let's take a look at the numbers. It's currently at 35.14. If I buy it at 35.14, I can sell the 35s because it's pretty close to 35. All right, so the 35 for next week is going for 75 cents. Now, just hold on a second because you're probably thinking If I'm buying it for 35.14 and I'm selling it for 35, I'm losing money. Well, you're right. You are losing money. But no, you're not. Listen closely. If I buy it for 35.14, I sell it to somebody else at 35. For that privilege, okay, they are going to pay me 75 cents a share. So my effective sale price would be 35.75. Okay, now I don't have to do anything. The only thing the stock has to do is to stay above 35. Well, take a look at the chart. Okay, here's the high of the year. Here's where it was last year. She went up, she went down. Here's the bottom right here, and it is in an uptrend at the moment. So if it hit the bottom here, now it's going up, because stocks will go up and then they will go down. They only do two things. They get to a point right there where guys like me, people like you say, oh, hell no, it's not worth more than that. Okay? Then it comes down to here at 30 bucks, and you say, holy shit, Dividend Energy at 30 bucks, let me buy some. So as you say, let me buy some, the stock goes up. And you can tell by looking at the chart. That's exactly what's happening here. So let's look a little bit deeper and I'll explain. And we're actually going to do a practice trade with Dividend Energy. Okay, so let's take a quick look. I'm actually going to write DVN down. A year ago, 45.29. Okay, a year ago. The high of the year, which is in the middle of April, 55.09. So it goes from 55.09 and drops all the way down to 30. That's a $25 drop. That's a big drop, almost 50%. Okay, so the last 90 days, which is the last 3 months. Here's the high, here's the low, down, up, easy. Okay, high, low, where was it, where is it, what's the direction? Down, up. Well, this is telling me it's the great time to buy. But that's the 90-day chart, the last 3 months. What is it doing the last 30 days? Because the last 30 days is good, giving me a good idea of where it's going to be next week. All right, so. Okay, here's the last 30 days. 30 days ago, we're up at 36. We dropped all the way down to 30, back up to 35. $5 increase on a $30 stock, that is 13% maybe. Okay, 10% is $3, but it says 5, so it's about 13%. Yeah, there's going to be profit taking. Look how close it is to the high. The high's right here. Yeah, so for me, it would be a no, but let's go through the numbers anyway for those of you guys who do like Dividend Energy. Okay. Let's get rid of that, and we'll take a look at the 35s. And I'm going to show you how you get your 1% flash. Are you ready? Hold on. I went all my life not talking to people. Now I do talk all day long. It hurts the throat, so the ginger tea helps. Okay, we're not going to do this week. Okay. We're going to do next week, because this week is only 2 days left. So next week at 35, it is 75 cents a share. Okay? That's more than 1%. So let's take a look at exactly what a covered call trade would look like on Dividend Energy. So I'm going to change this right here to covered call. Then I'm going to buy the 35s. Okay, I'm going to do one contract, so you know what one contract is. And I'm going to do it at the market. So first thing tomorrow morning, this will fill at 9:30 a.m. because the market opens 9:30 a.m. Not tomorrow, sorry. Friday, the market's not going to be open tomorrow. All right, here's what it sounds like. You ready? Buy one covered call, a DVN, that's Dividend Energy. 100, those are the weeklies. That means every week it expires. So 17 January 25, that's next Friday. The $35 call strike against Dividend, the stock at the market to open. Okay, I always tell people read it out loud so you can hear it and make sure it makes sense. Because most beginners lose money because they hit the wrong button. Now, I'm guilty of it also. Last year, 2024, I hit the wrong button twice. I lost, I think, 3,500 bucks because I hit the wrong button. It happens. I've been trading for over 20 years and I hit the wrong button every once in a while. All right? So, here's the profit right here. Here's your break even. What is it going to be the return on our investment? Well, let's take out our calculator and figure it out. Hit calculator right here. The profit right here, max profit. Now, when I say I want a simple, safe, predictable, now when I say predictable, I want to know what I'm making before I do it. Well, this trade here, the covered call, I know what my profit is going to be before I even do it. Most people just buy the stock and hope it goes up. Me, I'm buying the stock and I could care less if it goes up. Huge difference. Okay? Now, profit is $63. It says right there, maximum profit for this trade is $63. All right, so let's get this out of here. Putting the $63 into the calculator. Now, how do you figure out what your profit is? Well, your rate of return. You take the profit, $63, and you divide it by the purchase price. Well, in this instance, the purchase price is $3,437. So I hit the divide sign, and I put 3,437. That's for one contract, and that equals a grand total of way over here, 1.8% for 1 week. Now, if you didn't know, 1.8% for 1 week comes to close to 90% for the year. That's not bad if you think about it. But I'm not looking to make a huge amount of money. But hold on, it actually gets better. Hold on for a second. That is all cash. Okay, so you have a choice. Do you want an all cash account, which is the safest, or a margin account? Now, a margin account is a lot of risk, and you're not allowed to do a margin account until you read a certain book. And the certain book will tell you exactly what the risks and reward ratios are with a margin account. Do not do one until you understand. But I understand it, I do it, so I'm going to give you both. Okay? This is 1.8% if it's all cash. Now, the profit doesn't change. Profit stays 63. But on a margin account, depending on how long you had it, will depend on whether it is a 1-to-1, a 2-to-1, or a 3-to-1. That you don't need to know that, but mine is a 2-to-1. For every $1 I put in, I borrow $1 from the broker, so I can buy twice as many than I could if it was all cash. But listen to what the change is in the profit. So 63 is the profit, but on a margin account, this number here, buying power effect, is the amount I have to invest because it's margin. Okay, and that's only 1,687. Okay, now I hit the equal sign, and lo and behold, instead of 1.8 or 1.9, now I'm making 3.7%. But there's a lot more risk, and I do have to pay interest on the margin money that I borrow. So do not do it until you understand the risks involved. Okay, the stock market is just like a game of Monopoly. You're using paper money, you're using pretend scenarios, but the basics are always the same. Okay, buy three green houses, one hotel, one red hotel. 3 green houses, 1 red hotel. Monopoly. Here, you buy a good company, you sell it for the same price you paid for it, you get 1%. Well, in this instance, it's 2 or 3%. Okay, you do that every single week. You get over 50% per year. Taz, Riot isn't a dividend stock. You're absolutely right, it's not. But I invest in it anyway. And the only reason I invest in it is because I admire the person who told me Riot is a good choice. Now, if you ask me to take a look at something that I don't agree with, well, I'm going to say no. Well, Riot, I didn't really agree with it, but I respected the the trader who told me about it enough. All right, I'll take a look at it, and it's consistently profitable for us. But normally I wouldn't. Okay, it's like Apple is not on my list, not on my list, but it's on Warren Buffett's list. MPW not on my list, but it's on Warren Buffett's list. Okay, so if it's not on my list and it's on someone else's, someone such as Warren Buffett or another professional trader that I admire, then I will do it and I'll take a look at it. Best Canadian dividend stocks for retirement portfolio. Okay, Tyler 204. I have no idea about Canadian market, none whatsoever. If it's on the U.S. market, I'll know about it. If it's not in the U.S. market, I won't know about it. Right, let's keep on going. So I'm hoping that made sense. Now, I'm going to let you know now ahead of time. I will answer every single question. It may take me a while to get it because I stop all the questions from scrolling and I go through them one at a time. Montreal, how are you today? Say one at a time, so please only ask the question once. I will get to it. Okay, then why Riot? Well, let me show you why Riot. It's really not that difficult a question. Let's get out of that. Let's get out of that. Let's change this back to that. Let's go this over here. And let me show you why Riot. Even though it doesn't fit, okay? Now, Apple's the same way. It doesn't fit, but I do it anyway because it's on Warren Buffett's list. All right, you ready, Taz? This is why Riot, okay? The current price is $12.03. Here's the high, here's the low, here's where it was, here's where it is. This is where it's going. Down, up, down, up, down, up. Okay, that's where it's going. Let's zoom in and take a look. Now, I already own Riot, so let me explain to you why. Okay, last year, $15.30. We topped out at $18.30, and that was the end of February. Well, here's the bottom right here. And beginning of September at $6. Okay. Now, the last 30 days, okay, here's the last 30 days. 11 jumps up to 14.50, drops all the way down to 10. This is where I jumped in, way down here, because it's turning around and starting to go up. Yeah, okay, but it's back down these 2 days. Okay, do you know that's going to happen? No, you don't. But 2 days ago, okay, 2 days ago, Monday, look, here's your bottom, 2 days the upside. 3 days the upside is where I jump in. So yeah, I jumped in, okay, and then I sold covered calls. I made a nice fat premium. So let's see what the premium looks like. Currently, it's at $12.03. Right, so if I buy it at $12.03, I sell somebody the rights to buy it from me at $12, I get 68 cents a share. You take the 3 cents off that you're going to lose. Well, now I'm walking away with 65 cents a share. Now ask yourself a question. 65 cents is what percent of 12 bucks? It's over 5%. Now, over 5%, all cash, and a margin's over 10%. Where else can you get 10% in 1 week? So let's gander at it. You ready? Now, it's at $12.03. We're going to hit the 12s. So let's do another quick trade, and I'll show you exactly what the numbers are, and that's why I'm doing Riot. Not that I like it, it's just I respect, what's his name? I forgot his name already. Isn't that terrible? I expect Warren Buffett. So let's take a look. So, the covered call, the 12, right there. Let's do just one contract. Here's one contract at the market, first thing tomorrow morning. Here's what it sounds like. You ready? Buy one covered call of Riot 100. It's the weekly. 17 January 24. That's next Friday. That means the option expires next Friday. But here's the thing. I will always own the stock until it gets called away from me. So if I'm buying it at $12.03, I want to sell it for a profit. So if I sell the 12s, okay, 17 January 25, that's next Friday. The 12 call against Riot at the market to open. Here's my profit right here. $68. So let's get that calculator up here again. I'm bringing it up here this time. Clear. Now, 68 is the profit right here. You see it? 68 is the profit. So I put 68 into the calculator. Okay, what is it costing me to do this one trade? Now, to do a contract, one contract, you need to own 100 shares. So 100 shares equals one contract. So if I buy 100 shares at 12, okay, it's 1,100 bucks. Okay, if I sell somebody the rights to buy it from me at the exact same price I paid for it, I'm making 68 bucks per contract. Okay, Kai Kroc, give me a minute. I'll take a look at that in a second. Let me finish up with this example. Okay, so 68 is my profit. Well, what is it costing me? Well, right here. Cost of trade including commission, 1,132. So I hit divide, 1,132. Now, all cash account, that is going to be 6%. I buy it at 12.03. I sell it at 12. I pick up 6% rate of return for 1 week. That's crazy. Now, do they always work this way? No, they don't. I average 1% of a week because every once in a while I'll get something like this, something crazy. But here's the thing. Let's see what it would be on margin. Because this 6%, well, that's with all cash account. Well, let's take a look at the margin. Now, the profit's the exact same, 68 bucks. But margin, it's only 532 right there. Now, do not do margin until you understand the risks involved. Okay, so I'm going to divide it by 532. 532, and that comes to a grand total of 12.78% for 1 week. So the questions rattling through your head, number one should be, does it make sense? Question one. Question number two should be, do I like Riot? Well, number one, well, do I like Riot? If you don't understand who Riot is, do some research before you buy it, then be okay with it. Do I like it? Great. Am I willing to hold on to it until it hits my target? That's another couple questions. Now, Riot, I've been doing for quite a while, and it gives me crazy numbers every single week. I don't mind 12.78% for the week. All right, that's that one. Let's get out of that. Let's get out of there. Let's get out of there. Let's get out of here. Let's go back to here. Okay, so that's Riot. That's why I invest in Riot. Okay? Okay, I respect the person who gave me the tip. And then I did my research. Okay, Texas DMH. Hold on to that question. K. Kroc, what do I think about TYO? Tokyo Metro Stock. I'm going to say no. But, you know, let's throw it in here, and that way we can all say no together. You ready? TYO. Monthly. No. See? No. I only do companies that have weekly options. This is a monthly optionable stock. This is a no. It's not worth my time. The numbers just don't work. It's too freaking complicated. Okay? I mean, it's simple, but no. Thanks for that, John. Have a good memory. I'm in the 1% of that 20% you mentioned. Oh, John, I wish you luck. Okay? It's not a place where I want to play. Okay? It's all it comes down to. I want the odds and probabilities in my favor. If 80% of all options expire worthless, I have no desire to buy options. I want to be in the 80% group where 80% of my choices are already going to be in my favor. Okay, Texas DMH. If I am trading from a taxable account, are there any modifications I need to make to this strategy? Yeah, talk to a tax strategist and get yourself out of a taxable account. Okay? There's no reason whatsoever you should voluntarily pay taxes if you don't want to. But do it legally. Okay? Talk to a tax strategist, a tax planner. They will show you how to set up your trading account in a manner in which you don't have to pay taxes. But do it legally. Okay? Joe wants to take a look at American Airlines. AAL. It's going to be a no, Joe, before I even do anything else, because like I say, first thing I want to do is take a look at the chart. It is at the high of the year, okay? I'll wait for it to pull back before I jump into it. I'm not even going to bother looking at the numbers. It's already going to be a no. John, surprised you didn't like the name. Has been around for around 100 years. Uh-oh. And which one are we talking about, John? All right. All right. Rob, wow, well said. Thank you. You're awesome. I appreciate your knowledge. Rob, you're welcome. That's what I'm here for, to help you guys out. Jim, thank you for that. Tony, is it good for covered calls to expire useless? Absolutely. Simone, how are you today, Simone? Love the way she spells that name. Simone wants to take a look at Macy's. Now, just to let you guys know, if you didn't already, Macy's is my #1 stock for last year. It's the one I made the most money on, most predictable. All right, so at this moment in time, Macy's is at 1603, and sorry there, Miss Simone, it is in a downward trend, which means we'll be looking at it, waiting for it to find a bottom, which today is a 30-day bottom. So we're going to wait for it to hit the bottom, turn around, go back up. Macy's is my favorite. It consistently gives me 1 or 2% every single week. So, sorry, Simone, not this week. What's your AUM? You're going to have to explain to me what an AUM is. I'm on the West Coast. I'm asleep by 9. Well, Mark, we'll see how it works out. Pfizer, we already did Pfizer-ish. Croc, what is your best physical investment you are proud of? Because I think you're a multimillionaire. Yeah. Thank you. I'm going to take that as a compliment and just leave it alone. Let's keep on going. Can my bank do that for me? If I want them to invest $10,000 for me, your advice, please. All right. Hey, look at me. I can't give you advice because I know absolutely nothing about you. Uh-oh, I missed a bunch of questions. Give me a second. I have to go back to where the questions disappeared. Because if I touch the screen wrong, all the questions disappear. I got to go find back to where I was. All right, here we are, right here. Look at me. Okay, #1, look at me. I cannot give you advice. I know absolutely nothing about you. Can your bank do it for you? Yes and no. Okay? Banks won't like it because it's called broker assisted. Okay, if you do it yourself, you can do the trades for free. If you have your banker do it for you, you have to pay them. Every time they buy something for you, every time they sell something for you, you have to pay for that. Becca Makawa, how are you today? And one more thing, look at me. Okay? Okay, lean in for a second. Here, come here. Nobody has more interest in your money than you. If you think your bank is going to do anything in your benefit, no. They're going to hit you with fees. You want them to trade for you? Fine, they will. They're going to give you what they think is right for you. No. When I tell people you should be able to do it for yourself, if you don't have 10, 15 minutes a day for your own personal financial investments, okay, give it to someone else. Let them do it. But don't get unhappy if they're only giving you 4, 5, 10% per year. All right, Ron. Austin, have you looked at AUR at all? I have no idea what AUR is. AUR. Aurora, no. That was quick. Okay? Austin. AUR, monthly. You were not listening. Hell no. They just signed a deal with NVIDIA. Don't really care. Okay, now Austin, hate to be the bearer of bad news. Okay? If the company does not have 2 decades, that's 20 consecutive years of increased profits, I have no desire to look at them. If they join you with NVIDIA, double hell no. NVIDIA is a $140 stock. That's what it costs for the stock. Guess what the book value on NVIDIA is? $1.74. So if, by chance, the federal court says, NVIDIA, you need to liquidate and pay off all your investors, that $140 per share you just paid for, yeah, you're going to get $1.74. That's it. That's the book value. Also, it gets worse. The dividend that NVIDIA pays, 1 cent per share. Okay? Double hell no. Owning stock day before EX dividend date, but supposed sold before the date of record. Now, OC Pet Doctor. Years ago, that would make sense. Nowadays, not so much. Let me explain. Let's go back to here. Now, years ago, let's check this out. Let's go back 2023. Okay, give it a second. It'll populate. Okay, here's all the stocks that have the EX dividend dates, January 2023. Look at the very bottom. Okay, the very bottom. Okay, the symbol, CAT, C-A-T. The dividend, $1.11. Now, here's the important part. There are 4 dates when it comes to dividend stock. Date number 1 is the announcement date. Hey, this is James from Caterpillar. We had a very good year this year. We made X amount of dollars. You, as an investor, are going to get this much money, and we're going to pay it to you on this date. That's the announcement date. Date number 1. Date number 2, the green dots, is the EX dividend date. The EX dividend date is the last day the stock trades before the dividend's paid out. Okay? If you want to collect the dividend, you have to buy the stock before the EX date. All right? Date number 3 is the date of record. Okay, right down here. The date of record. Whoever owns the stock on the date of record is entitled to the dividend. It means you get the dividend if you own it on the date of record. Date number 4, easy, payment date. That's when you get your money. So what is different now that was a couple of years ago? Well, let's take a look at the dates. The EX dividend date, January 19th. Well, that's right here. The date of record, January 20th, the very next day. So you have to buy it before the 19th, like on the 18th, and you have to own it the 19th and the 20th in order to collect the dividend. You have to buy it before the EX date, okay? The 18th, the 11th, the 13th, the 5th, the 27th, 29th, whatever, before the EX date. All right, so let's look at 2025. Okay. Announcement date, EX dividend date. Ready? EX dividend date, 1/22. Okay? 1/22. Date of record, 1/22. They've changed the rules. So now you just got to buy it the day before the EX date, because the EX date and the date of record are the same date. Okay, so buy it before the EX date, sell it after the date of record. Carrot with hot sauce. Hey, James, just started your podcast. Thank you for the help. You're welcome, Carrot. Connor, what dividends are in your portfolio? A whole bunch of them, Connor. No, I have 7 accounts. Okay, last year it was 4. Wait a minute. No, last year it was 5. Then it jumped up to 6 by the end of the year. Now we're at 7. So I got 7 accounts that I take care of. I think we can use Thinkorswim to practice. Tony, you're absolutely right. It is what is called, okay, if you come down here, look at this. Okay, see right down here? Okay, real account, paper trading account. Now, I do continuously paper trade so that I can get good at the new strategies that I'm coming up with. Now, the strategy I'm showing you here is the one I created for my 9-year-old daughter. Simple, safe, predictable, consistent. Okay, 1% a week. That's the goal here. This is the only strategy I give away for free. Okay, I think I'm being a nice person coming on here every night with you good people, how you too can get 1% a week simply, safely, all that kind of nice, neat, fun stuff. So, yeah, let's keep on going. I guess you're in a warm state. No, get the heater on. Okay, I usually have my heater sit at 68 because I like it, not too cold, not too hot. Okay, Sunday has an interesting question. Sunday, here's your question. You ready? Hi, can you share the 5 things you look for? Well, you ready for this? 2. I only look for 2 things. Consistent profitability and weekly options. Or I should say 20 years. Number one, 20 years of consistent profitability and weekly options. Those are the only 2 things I'm looking for. Nicholas, fall, okay, cool beans. Am lucky. Hi, I'm so excited to learn. Thank you for your time explaining. Well, am lucky, ask a question. Hold on. Matthew 24, Sermon on the Mount. Ask and you shall receive. Seek and you shall find. All right, let's keep on going. That's about as religious as I'm going to get with you guys. Darren, hi James, can we look at General Mills, GIS? Let's get this out of here. Let's go right here. Let's go right here, GIS. General Mills. Now, no. Okay, so we're looking at it, and it's a no. Do you notice I haven't even turned around and looked at it? Why? Because I know that General Mills is a monthly optionable stock. Yeah, they've been around for over 100 years. Yeah, they consistently increase their dividends. But I can only trade them once a month. Monthly optionable stocks only trade once a month. No, doesn't work. The numbers just don't work for me. I'm not telling you not to do it. You can do whatever you want. You like General Mills and you think monthly options are great? Wonderful. Okay? I don't want 12 to 24% because if I'm getting 1 to 2% with each option trade I do, well, a monthly, that's 12 to 24%. Now, I didn't go to college. I admit it freely. Terribly sorry if you guys did and you think I'm beneath you. Whatever. Okay? But I do know that 52 is better than 12. So if I'm getting 1 or 2% for every option trade, a monthly I'm getting 12 to 24%. Weekly, every 7 days, 52 times a year. 1 to 2%, 52 times a year is over 52 to 100% a year. I don't know about you, but like I said, didn't go to college, but I do know 100% is a hell of a lot better than 24%. So yeah, GIS, monthly optional stocks, no. Sorry, don't do them, not worth my time. D. Rob Law knows. Okay. D. Rob knows. Okay. 7-day options, yeah, why not? They expire every 7 days. So when one's gone, I jump into the next one. Then I jump into the next one. Then I jump into it 52 times a year. If I get 1 to 2% every option I do, well, that's 52% per year. All right, let's keep on going. What else we got? Cash. If stock bottoms out, do you lose the stock? No. You never lose the stock until you sell it for a loss or you sell it. It's always yours until you sell it. Sean McMichael, how do you deal with taxes? Are taxes a nightmare with all the capital gains and all the small trades? Sean, that's an awesome question. I'm going to answer it this way. Are you ready? If you're having an issue with taxes in your trading, you really need to talk to a tax strategist or a tax planner. Now, depending on how your account is held, is it in your private name? Is it in joint tenant? Is it in a trust? Is it in a foundation? Is it in a corporation? How you hold title to your trading account will let you know how you have to deal with taxes. That's why I always tell people, you need to talk to a tax strategist. Sweet. Is that sweet goat or sweat goat? You probably get this a lot, but can you look at XRP next and explain it? Yes, I can. XRP, are you ready? I get this question twice a week. XRP, and this is what you get with XRP. No options, no chart. It's not a dividend stock. It is a no. Okay? Fig, I can't even read that one, buddy. Fig. All right. Why do you think it's going to keep going up, recurring revenue? Why do I think it keeps going up? I nothing about what I think, okay? I like to look at facts. Facts are facts. Okay, so here's the thing. The companies I like are companies that consistently increase their profits, which means for the year 2024, somebody somewhere is taking a look at every single company in the stock market and saying, well, this company increased their dividends this year. Wait a minute, they increased them last year. They increased them the year before. They increased them the year before. So there is a service that follows every single company. When you're talking about money, money makes the world go round, you know? So there's an old saying, if you can control the money, I care not who runs the country. So money is very important. Is it going to save your life? No, it's not. It's just one less thing you need to worry about. So here's the thing. If the company is consistently profitable, that's my only concern. And how do I know? Well, there is a service that keeps track of these things. So if you have a chance, go to Google in the search for Dividend Kings List 2025. Okay, now the Dividend Kings 2024 list was 54 companies that have consistently increased their dividend payments to their shareholders for a minimum of 5 decades. That means 50 years of consistently increasing their dividends. Now, a dividend is a portion of the profits, which means if the profits consistently increase, so does the dividends. So if the dividend consistently increase, well, the profits got to increase. So if I go to the Dividend Kings List 2025 and AbbVie, Home Depot, Lowe's, Tootsie Roll, and all those companies are still on there, well, that means every single year for 5 decades, that company was consistently profitable. Okay? Same thing with the Dividend Aristocrats. Same thing with the Dividend Champions. Same thing with the Dividend Contenders. There are a bunch of people out there that are focused on making money. And what do? Well, they follow these companies and they take a good look. They take a better look than I do. Me, I'm only concerned is, are they consistently profitable? Well, I will look for Dividend Kings List 2025 because I don't think they updated it yet. I'm not 100% sure. Hold on. Let's find out. Let's go here. Let's go here. Let's go to Google. Okay, now we're going to look up Dividend Kings List 2025. Okay, the top dividend stocks 2025, blah, blah, blah. Top dividend, nope, here he is right here. 2025, right there, see it? 2025 Dividend Kings List, 54 companies. So there are 54 companies that have increased for last 5 decades for 2025. It's right there. I can do the exact same for the Dividend Aristocrats. Okay, so Dividend Aristocrats. Okay, Dividend Aristocrats list 2025. 66 companies. So last year there was 67. This year there's only 66. See, somebody else already does the list for me. All I have to do is I have to cross-reference the new ones with the old ones. So what's on that list? Well, all you do is just click on it. I can't read it, it's too damn small. But there it is. Just go to the search engine. Dividend Kings List 2025. Okay? We don't need that anymore. We don't need this anymore. We don't need this anymore. Tra-la-la-la-la. Oh, that's Robinhood. No. Okay, you don't need to see that. All right, here we're back here again. All right, so That makes sense? Do I sell puts also? Yes, I do, but I do not teach it here. Okay? All right, let's keep on going. You probably get slot, but why XRP, yeah, not dividend stock. Why do you think it's going to keep going up? Recurring revenue. Because if they don't keep going, all right, here's the thing. If you're on the Dividend Kings list and you start losing money, well, that means you can't increase your dividends. Well, guess what happens? You get your ass kicked off the list. Now, it has happened many times, okay? A company that's consistently profitable, all of a sudden, they run into a dry patch and something goes wrong. Well, they decrease their dividends. They are now off the Dividend Kings list, and they got to start over from ground zero, which means they got to wait another 50 years of consecutively increasing. I love this next question, okay? But, like, why? Okay. Now, I'm going to read this back in the context of which it kind of makes sense. Why do you think it's going to keep going up? Recurring revenue. But, like, why? Well, here's the thing. Coca-Cola has been making Coca-Cola since the 1880s. Well, that is 140 years of making Coca-Cola. Now, I don't know this for a fact, but I'm pretty confident in saying I think Coca-Cola is going to be making Coca-Cola this year. I even think they might be doing it in the next 5 or 10 years. Well, if they've been doing it for 140 years, what would make me think they're going to stop? Like Ford Motor Cars. They've been making Ford Motor Cars for over 100 years. Why would I think that they're all of a sudden going to go to doing flower arrangements or getting into construction or getting into technology? No, they're going to continue making cars because that's what they do. If they're consistently profitable, well, that's the companies I want to invest in. My question to you would be, why would you invest into a company that is not consistently profitable? I honestly really don't care about these new companies coming out. They may be great, but most new companies never make it to 3 to 5 years. 1 in 100 or one, I think it's like 1 in 100 or 1 in 1,000 don't make it to 10 years. Well, the companies that I like, well, they have 20 years or more of increased dividends. Well, that means it's got to be at least a bare minimum of 20 years old, which means they have stood the test of time. They have consistently increased their dividends. They are consistently profitable. If they're not, they get tossed off the list. They get tossed off the list, and I don't want to invest in them anymore. There's 9,813 different companies to invest in. Why would I put my money into a company that's not profitable? It doesn't make sense to me. So, point blank, if the company's not profitable for at least 2 decades, I want nothing to do with it, unless it is recommended to me by somebody like Warren Buffett. Okay, hopefully that makes sense. Dr. Rob, yay for us Gen Xers. Yeah. See, you know, we stick together, us Gen Xers. It's a funny thing. Gen Xers, we stick together, but we really prefer to be left alone. Okay? All right. How are you doing tonight? I'm Tay Reese. Dude, I haven't heard from you in a while. Cool beans. All right. Snipped Life. Not quite sure what that means, but okay. CBU. Never heard of it. Now, usually, if I've never heard of it, it's usually going to be a no. Why? Well, it's a monthly optional stock. I don't even bother looking at it. Okay? Now, when I say no to monthly optional stock, it boggles my mind why you would ask me to take a look at it. Because I always go back to rule number 1. If you don't understand the company, don't invest in it. Well, if you're looking at CBU, it basically tells me you don't know what the hell you're investing in. Because if you did know what you were investing in, and I say I don't do monthly optional stocks, well, then you wouldn't suggest it to me. So, I honestly don't know what to tell you there, Snipped Life, okay? Weekly optionable stock only. If you don't understand it, don't buy it. Apparently, you don't understand CBU because you don't know that it has monthly options and not weekly. Tonka Tuber, how are you, dude? Tonka Tuba. All right, CBU is a no. Ooh, PDR wants to take a look at U.S. Steel. I like U.S. Steel. U.S. Steel has been around for over 100 years. James, did you pick up Intel yet? Well, I didn't pick it up. I've already owned it. So I've owned Intel for quite a while. Intel has awesome premiums. We're actually going to take a look. I'll take a look at Intel next. So I'm going to write that one down for you. INTC. Yep, I'm old school. I write shit down. I don't trust computers. Hogan, what are the risks with this strategy? The risks, Hogan, is number one, you do something stupid and hit the wrong button. There's your risk. There was another risk. Well, another risk is the company could disappear overnight. Now, I find it hard to comprehend Coke or Pepsi or Ford or General Motors to disappear overnight. But the federal government says we have to tell you that. If I'm giving you advice, which I'm not doing, okay, if you're asking me what the risk is, well, the risk is that the earth opens up and swallows every single Coca-Cola company, every single outlet, every single manufacturing company. Is it possible? Yeah, it's possible. Is it probable? No. Okay, but that's the risk. What is a higher possibility is you hitting the wrong number, hitting the wrong button, buying instead of selling, selling instead of buying, hitting the wrong night and selling at the wrong price. That is more probable than Coca-Cola disappearing overnight. There's your risks. Doing something stupid or the earth opening up and swallowing up Coca-Cola or all these big companies. Can it happen? Yeah. If you believe the magic bullet bullshit, where the bullet can go, stop in midair, turn 90 degrees, go 3 feet, stop again, wait 10 seconds, and then go forward. If you believe that bullshit, then yeah, Coca-Cola could disappear overnight. And if you guys don't know what the magic bullet theory is, you should pay attention to some history. Dakota Kid, I wish people were more careful with martial art. What the hell's that got to do with this? All right, I'm going to ignore that question. We're talking about dividend stocks, not karate, but I'm glad you're interacting. All right, so anyway, what? Okay, we're looking at U.S. Steel. Okay, now I do own some U.S. Steel. Let's take a quick look at the numbers because I always want to take a look at the chart first because the one-year chart is going to give me, it's like, Johnny, tell them what's behind door number one. Well, door number one is U.S. Steel on the one-year chart. 5 things. The high, the low, where was it, where is it, what's the direction? Sideways down, up. All right, simple, easy, right to the point. Dakota Kid, that's funny. What are my thoughts on SoFi? Hogan, dude, you were not listening. No profits, no thank you. SoFi does not have dividends. That is a no. Okay, the name of the show here is Dividend. I'll say it again. Dividend Stock Talk. If you don't know what you're buying, don't buy it. SoFi has no dividends. That is a no. Okay? All right. U.S. Steel. High, low, all that kind of nice, neat, fun stuff. Currently, we are at $32.99. Now, $32.99, the closest strike price is going to be the 33. And the 33 is going for 95 cents a share. That is extremely close to 3% for 1 week. 3% for 1 week, if you do not know your math, 3% every single week for a whole year is over 150% rate of return. 3% every week. Well, U.S. Steel, 3%. Now, the question is, do you like U.S. Steel? Well, here's the numbers. High of the year, $48.95. The bottom of the year in the beginning of September was right around $26.27. Last 90 days, here's the last 90 days. 37 jumps up to 43, drops down to 30, back up, back down. Now we're in an upward trend right here. The question always comes back to is, does it make sense? That's number one. Question number two is, do I like U.S. Steel? Question number three, do I like U.S. Steel at this current price? And question number four, can I picture myself buying U.S. Steel, holding it for the rest of my life, or until it hits my target, whichever comes first? Okay, so if I'm buying it at 32.99, I want to sell it at 33. Okay, I know it doesn't sound like a lot of money, but the 33 is going for 95 cents, and that is over 3%. Do I want to hold on to US Steel for the rest of my life? No. I want to get it when it's high and a low and it's bouncing off the bottom going to the upside. I love bottoms because a stock will go down to a certain point, stop, turn around, and go back up again. That's what I'm looking for, and US Steel is a perfect example. Is what you have on the screen only accessible if you have an account? Sunday, unfortunately, that is a yes, because this is Think or Swim. It's a trading platform offered through Charles Schwab. Now, you can download it onto your computer and use it for free for a short period of time because Charles Schwab wants you to open up an account with them, blah, blah, blah. You were looking at X. Yep, we already looked at it. What are you using to look at this? US Steel, Think or Swim through Charles Schwab. No, you just need to download Think or Swim. Yeah, download the, what do you call it, the desktop version. Don't use the online version, it's not that good. Uh-oh, Sadie and family. Okay, Sadie, I need you to understand one thing, if it's okay. Sadie and family, why would it be no? You really got to explain to me. So here's something, Sadie, you may or may not know, all right? Now, I am broadcasting through a whole bunch of different channels. I got Facebook, Instagram, TikTok, YouTube, and YouTube. Okay, now I do have a couple other channels. Wait a minute, and Rumble, that is also on there. And I'm getting ready to do LinkedIn. Okay, but anyway, I have hundreds of people here, hundreds of questions. So why would it be a no? You need to explain to me why what would be a no. Your question has to have a little bit more information on it because I look through so many different questions and I do look through each and every one. But when it's a half a question, why would it be no? Well, why would what be no? Sadie and family, it isn't at a 30-day high, DVN. Oh, we're talking about DVN. Why is DVN a no? Oh, there we go. That's why. Okay, so why is DVN a no? You should have said it. Why is DVN a no? Okay, here's the high of the 30-day at 36. Here's the bottom right here. Okay, now you have one 30-day high, you have one 30-day bottom. What usually happens? 30-day high is profit taking, the stock drops. Gets down to a certain point. It's like, oh shit, it's at that price. Let's buy some. Great, now it goes up. Well, you just lost your opportunity to jump in because now it's here. Well, what's going to happen next? Well, it went from $30 to $35.15. That's a $5.15 increase. Well, on a $30 stock, that's almost a 13% increase in 2 weeks. So if you get a 13% increase in 2 weeks, you don't take that profit. Well, that's your own damn fault. It's not a profit until you take it. Okay, and if you don't take your profit, the market maker will take away from you, or there will be profit taken and it will drop right back down to here, and then you don't have no profit. It's not a profit until you take it. So the reason why DVN is a no is because we missed the opportunity. The opportunity was 2 weeks ago. Okay, the high was here, it dropped down to here, it turned around. See, here's the bottom. 2 days the upside, this is where I would jump in. 2 days the upside, right here, and then look at that movement. I like to isolate where a bottom is on a good company. Devon's a good company, okay? But I missed the opportunity, okay? That's why it's a no. 86 is in the house. What's happening at 86? PFG, Spark Seeker, PFG, a good stock for dividend and growth. Well, let's take a look at it. Now, I'm probably going to say no because I never heard of it. And it is a no, okay? I don't do monthly optionable stocks. The numbers just don't work. Now, when I also say Spark Seeker, don't buy something you don't understand. And when I say don't buy something you don't understand, that means if you know it has no weekly options, why are you asking me to take a look at it? Okay? I have a very simple rule. No dividends, no thank you. No weekly options, no thank you. Monthlies just don't work for me. TikTok edits. I was thinking about drinking and my mouth said some things. I have no idea what that means. See, I like this question right here. Follow your heart. Why are all stocks down? I beg to differ. Okay? Devon Energy, 30 days ago, at 35. She dropped down here to 30. Well, now it's up. So no, not all stocks are down. Okay? Maybe all your stocks are down, but not all mine. Okay? I have a very strict regiment. Okay? I buy when it's down here. Okay, bouncing off of the bottom, okay, comes down. This is where I want to jump in. Once she gets up to a certain point, once she goes high enough, I jump out and I take the profits and move on to the next one. What's the symbol? Tyrese, it is DVN. I will Venmo you 20 bucks. Let's work the dollar. I have no idea what that means, but okay. TikTok edits. How do I send you 100 so I can understand what you're talking about? You don't. I get it, Taz. Way to go. LAC. Jordan, seriously, dude, would you think I wouldn't notice? You asked me to look at LAC last night. Last night, LAC was a no. What makes you think LAC is going to be a yes tonight? Okay, Tiskar. ELEC is the ticker symbol going to $10. They have the goods. Okay, I'm going to disagree with you. Never heard of ELEC. So, E-L-E-K. And I needed to have someone to yell at tonight. Hell no. No dividends. No thank you. No options. No thank you. Simple. Jordan. TikTok edits. You can send me 100 bucks. I'll tell what everything you need. Chicken and biscuits. How are you today? How can Robin Hood says the loss could be unlimited on a covered call? What happens if you lose? Basically, you lose, you lose. Now, depending on what trade you do, your loss can be unlimited. Because I know nothing at all about what your account and how you have set up and what kind of trade you're trying to do. Okay? There's no unlimited loss when it comes to covered calls. If you buy Ford at 10 bucks and you sell it to someone else at 10 bucks, okay? If the stock goes up, they have the rights to buy it from you at 10 bucks. So if it goes from 10 to 100, they have the right to buy it from you from 10 bucks. There is no loss there from you. If the stock goes down, well, you got Ford at 10 bucks. Hey James, I've learned a lot from your vids that have helped a ton in university. Thank you. We'll double alrighty then. Thank you. Thank you. Chicken and biscuits. It's not a loss. It is a missed potential gain. Okay, you have to word it that way. He's right. Hola from Arizona. Hola, ¿qué pasa, amigo? ¿Cómo está? ¿Está bien? ¿Y tú? Yes, no? Okay. Fred, Keno. I have no idea what that is. Is that Bloomberg's terminal? No, that is Charles Schwab's terminal. I bought Johnson & Johnson and Verizon yesterday. Okay. I don't know why you'd buy Johnson & Johnson and Verizon, but all right, let's take a look at it. J&J, Johnson & Johnson. First thing. High, low, where is it? What's the direction? Down, up, down. It is falling. Why would you buy something that is falling? Hogan, what days of the week are best weekly sell covered calls, or does it matter? No, it does matter. Okay? So a weekly covered call, let me see if I can explain it to you in a manner of, we'll do it in an elementary school type fashion. All right? A week is 7 days. Okay? If I buy on a Monday, if the stock market opens up at 9:30 a.m. Monday and closes at 4 p.m. on Friday, the maximum amount of time you have is Monday morning, 9 a.m. to 3:59 p.m. on Friday. That is the maximum amount of time. Maximum. You can't get any more because the market opens at 9:30. The market closes at 3:59. At 4 o'clock, you can't do anything. That is the maximum. So the maximum amount of value you're going to get is 9:30 a.m. Monday morning. Because as the sand falls through the hourglass, so do the days of our lives. Some of you know what that is. But it's true. As the days tick away. Let's think of it Monday. Monday morning, you have 5 days. When Monday is gone, you just lost 20% of your earning potential. When Tuesday is gone, you just lost 40% of your profit potential. As the days go by, so don't your profits, because you're selling somebody the rights, not the obligation, the rights to buy it from you at a certain price by a certain date. So if I do it on Monday morning, first thing, Friday at 3:59 p.m. is the last opportunity you have, or whoever can do to exercise that option contract. That is the maximum amount of time there is. Now, if you do next week's, well, you lose opportunities for this week. Okay, so the maximum amount every week is Monday 9:30 to 3:59 p.m. Friday. That's why I sell everything on Monday morning. I buy my stocks Monday morning. I sell first thing Monday morning. I actually do it before the market opens, so I know what it's going to be when it opens. Okay, so if you pick a strike price below your cost, stock cost, you collect that premium and roll the call up. Yes, you can do that. Okay, Friday afternoon at 2:30, we jump on, and between 2:30 and 4, we decide. The positions I bought on Monday, what did I buy it for? Where's it at now? What's the best situation that we do? Let it expire, let it get called away, sell it, roll it. What is the best choice? Unfortunately, I can't answer the question of Friday afternoon what ifs on a Wednesday evening. Holy shit. We got 10 minutes left. Okay, so I'm not going to look at any more stocks. I'm just going to answer the questions because I'm going to check out in 11 minutes, and then I'm going to take a half-hour break, and then I will do another show for the 9 p.m. Pacific time people. So let's see what we got. ED, erectile dysfunction. No. So ED is Consolidated Edison. They've been in business for over 200 years. However, their monthly optional stock, it doesn't fit. PEHUN, no. Is it going to get pretty up and down this year? Yep. How about RXRX? Nope. CP, Alex, uh-oh. Damn it. I hate when that happens. I answer all the questions. Here we go, RXRX. How do you not know AUM? Alex, I'm going to explain to you specifically and see if you understand this. You ready? I'm not going to pull any punches, okay? I'm a Gen Xer. I really honestly don't care about your feelings. There is no safe place, okay? We settle things. We go outside. We fisticuffs. You know what that means? I honestly don't care about your feelings. AUM is a no, okay? 2 decades of consistent profits. Weekly options. AUM does not fit. Okay? You can ask me all you want. You can stamp your feet. You can bitch moan all you like. It does not fit. Oh, AUM, assets under management. I thought you meant AUM, a stock, because AUM is a stock, and that is a no. But assets under management, that's none of your damn business. How do you like that answer? Luigi, do you pick your investments Monday, or are you setting it up to move over the weekend? I set up my moves over the weekend. And Monday, first thing 9 a.m., we jump on and we take a look before we jump into anything. So, Alex, I'm gonna apologize to you because AUM is a stock that has no options. Okay, so AUM is a no as a stock, but assets under management, totally different story. And totally honest with you, it's none of your business, okay? What do you think about INVZ? That's a no also. What implied volatility value do you normally feel safer with to enter? Okay, you're asking questions that have a lot more to do than the understanding of a 9-year-old. Okay, once I explain implied volatility, Black-Scholes pricing methods for standardized options, intrinsic values, really interesting information, yeah, it goes right over a 9-year-old's head, and they say, I don't want to do it anymore. It has to be simple, it has to be safe, it has to be predictable, consistent, but mostly simple. Remember, my daughter was 9 years old when I created this strategy. CP banks make themselves rich? Absolutely right. Mark. Would you wield leverage products? The premiums are higher. Example, NVDL, hell no. SOXL, double hell no. TQQQ, triple hell no. Dude, when I say, honestly, before you pick anything to invest your personal money into, understand everything about them. Each one of those companies you said, none of them are over 20 years old. None of them are consistently profitable for 20 consecutive years. Now, do they all have weekly options? I don't know. They don't fit the first criteria. 20 years of consecutive profitability. They are all no, no, and double hell no. Okay, I'm very strict on what stocks I put my money into. If you want to put your money into, fine. I'm pretty sure that each one of those is an electronically traded fund, an ETF. You're giving your money to a computer saying, here, you do it for me. Okay, that's not my thing, sorry. What about Pepsi? We already looked at Pepsi. Okay, we looked at, Pepsi I think was the first one we looked at today. T+2, only sell it after RD if price recovers. Fred, I'm not quite sure what RD means. I mean, because there are a lot of acronyms. It could mean almost anything. Sunday, figure it out. Yeah, that works. Can you look at HOG? Okay, unfortunately, I'm past the point of looking at stocks at the moment. I'm just going through and answering all the questions. Now, I do have Harley Davidson. I think I have it in 3 different accounts. Okay, and yeah, I bought it at 41 and it's at 34 at the moment. So yeah, I'm a little on the downside with it, but I am still profitable because I consistently get a return on every week. Do you have different strategies on the link in your bio? And if you do, which link is it? Okay, here's the link right here. Whoops. Okay, the 10-minute trader. Okay, right here where it says live trading, that's where all my live trading is, and that's where my morning trading group is. I try not to pitch anything here. I'm not trying to sell anyone anything. Somebody asked me a question, there it is. All right, let's go back to where we were. Andrea, Yahoo Finance listed the 10 most underappreciated stocks December 2024. Under 10, WBA was on the list. I'm sure it was, but WBA was at the top of my list. And was unaware that CVS is the number 2 healthcare provider because they bought Aetna. Cool beans. CVS is not going anywhere. Yeah, I get that too, Andre. I'm going to agree with you. Okay, now, Andre, you know, because you're part of the morning group, you know that I have CVS. Thoughts on CRK? I have no idea who CRK is. CRK. No. That was quick, wasn't it? Thanks for explaining this. You want it? James, isn't DVN a monthly optional stock? DVN? No, it is not. See? Weeklies. Right? Weeklies. Andre, you should know that. Did you spoke about XRP? Good to invest into. Okay, say Alien Cry. I have no idea what that means. XRP is not a dividend stock. That is a no. I only do dividend stocks. I don't do crypto. I don't do Forex. I don't do futures. I don't do smart contracts. Dividend stocks only. Why is right a yes if there is no dividend? Okay, user 1126647454119. Because it's on somebody's list that I what do you call it? I respect. Okay, see now a lot of stuff on Warren Buffett's list. Now, we all know who Warren Buffett is. A lot of stuff on his list are not on my list, but I will trade them because they are on his list. All right, it's 11:30. I'm out here. I'm going to take a half-hour break. I'm going to jump back on and be on at 9 p.m. Pacific time. Okay, so you guys don't go anywhere. For those guys who want to stay around and learn some more, I'll be back. Thank you. You're welcome. You guys have a great night, and we will see you again in about a half hour for those who want to come back. And now the end is near. And now, ooh, 6,000. Cool beans.